Welcome to today's episode of the Simply Financial Podcast. This is your host, Christopher Calandra. Would like to increase your financial IQ with today's episode. I so enjoyed and got so much value out of the recent episode I did on surviving the storm about property and casualty insurance with my special guest, Stephen Hunt, our expert on property and casualty insurance matters. So I asked him to come back. There were some things that we didn't get to in the first episode. So he was kind enough to give me some more time today. If you're listening to this and you didn't hear the first episode I did with Steve, I suggest you go back and listen to it. It's excellent. The title of it is Surviving the Storm. It's season 8, episode 43. Check that out if you haven't done so already. But with that said, Steve, thanks for joining me again today.
Thanks. I'm glad to be back, and we got some good stuff to talk about.
I learned so much, as I said in the opening in the last episode. It was really a valuable experience for me personally, sort of scratched my own itch. And I think, and I've gotten some really nice feedback from clients of mine that are regular listeners of the show. So that's good. We didn't get to a few things, which I wanted to get to today. But how does it sound when I describe you as an expert? Do you feel good about yourself?
I do feel good about myself. It's hard to be considered an expert, because to me, I when I think of an expert, I think of, like the best neurosurgeon in the world, that can go in your head and fix your brain. I think of, when I hear the word expert, I think of people like that, not people like myself.
There you go. So as I described, there are a few questions I didn't get to last time, and we cut it short just because of, time limitations, your schedule, mine, as well as not trying to have the listeners listen in on an extremely long form episode. That's not really how we do things here at Simply Financial. But let's get to the questions. The first one is, how is technology changing the property insurance industry? I have a feeling it's pretty significant. Tell us about that.
Yeah, so I have a little pros. I'll give you some pros and some cons, and this is my opinion, okay? And again, I'm an agent. I do not work for the carrier. So if you worked for a carrier, you might get a little bit of a different flavor than you will from a guy that's on the street with the consumer. So the pros to it. I think it's made us substantially more efficient as an industry, right? You can write a house, you can insure a property, and you can look at that without having to physically be there. You have satellite imaging, you have online information, property records that are online. Real estate listings are very, very detailed now. They have what's called a Matterport camera, where they literally walk through the house as if you're physically there. So there's a lot of tools at our fingertips to really get a glimpse of what these properties are without having to leave our chairs, which makes us more efficient. I think that's a positive. I think the other positive of it is the carriers have access to the same information. So nothing gets missed. Less items are missed, right? A long time ago, an agent may forget to ask, do you have a pool? Right. And then the inspection of the house comes after we bind coverage and we find out there's a pool. Now we have an issue to deal with. Right. So we can get all of that out in the open. Now, a good agent should ask all the proper questions when interviewing a potential insured. But there's times where we all get busy, we get rushed, and things get missed. The other thing that's fantastic about it is we have an issue in a lot of the country where roofs are aging. There's new materials out that last up to 50 years for residential roofs, but some of the older materials are only 20 or 30 years. We can, with satellite imaging, get pretty close to a age of a roof, because oftentimes people will buy a home and they really don't have any idea exactly how old the roof is. But the satellite imaging we have can give us a pretty good indication of the age of a roof, which can help a carrier make a decision whether we want to write this property or not. Based on the roof. So like those are two examples of some pros. An example of a con, in my opinion, is there's so much information at the carrier's fingertips and at the agent's fingertips. Sometimes that works against a client. Now they use credit score now. They use what's called an insurance score. but it has similar criteria to a credit score, and they weight, your financial stability as a heavy factor in what you pay for premiums, especially on auto insurance. There can be situations in life where somebody's very, very financially secure and very, very financially savvy, but let's say they had a medical situation that costs a lot of money, or a divorce, or something like that maybe makes their online financial profile not look as good as reality, right? And the carrier may look at that person based on that and think maybe they are less than ideal from a responsibility standpoint, and they have to pay higher rates than the underwriter looking and understanding the situation, realizing, hey, this person's a very responsible person. They just got, they just have a situation in their lives. It's not gonna make them a greater risk of claim for you, Mr. or Mrs. Insurance Carrier, because of their situation. So that's one of the human element, the human underwriting element has been taken out of the game in the decision-making process at the carriers a little too much, in my opinion.
Gotcha.
But I can understand why they are doing it that way. They have piles and piles and piles of data that supports the decisions that they're making. So again, earlier in this conversation, I said, I don't work for the carrier. So I'm not privy to all the information. So I'm sure if you went and talked to a product development expert at the carrier, they would contradict some of what I'm telling you, and they'd have data to back it up. I'm just speaking from the street, right? They're
A professional agent, an expert in their field, and trying to compromise between the needs of the carrier and the needs of the public.
Correct.
Back to something you said earlier about pools, using that example, you said that maybe the agent or the carrier doesn't ask. I'm kind of sensing that maybe you're being a little kind. In a lot of instances, some bad actors might say we don't have a pool when they do have a pool, because they're trying to get better insurance rates. So they're not
100%.
being truthful. And it's harder, right, with technology, because with satellite imaging, with Zillow, with listings and so on, it's easier today to figure out if you do have if a client or a prospective insured client has a pool than in the past, because of these advancements in technologies. It is allowing the carrier to catch some people that are not being truthful, right?
100%. And the pool thing is a little bit of maybe a bad example, because it's kind of hard to hide a pool. But where I see it a lot is they hide adult drivers in households, where you'll have adult children that are in their 30s and they may be living in their parents' house for whatever reason, right? And they will send us information and not tell us that they have 4 other people living in the house. Maybe it's a son and their wife are living in the house temporarily because they're trying to find a new house and they don't have a new house. And now when the technology will catch that a lot of times, the carriers, and pick up who's living in the house, and we'll be looking at a situation where we're trying to write a piece of business. Let's say it's been with the same carrier for a long time, and they aren't aware of the changes in the household, and then a new set of eyes doing it the right way picks up on everything, right? And now you can't compete, you can't write that piece of business, but at the end of the day, the carrier that's on that is also not getting adequate premium for the exposure in that house. So it creates a snowball effect, which leads to higher claim payouts, carriers not pricing accordingly, and kind of exacerbates the price increase issue that we've been talking about. So, go ahead.
I'm curious about this. Are carriers using drones to check out properties, commercial as well as residential, to evaluate not just roofs, but the property, the neighborhood, that kind of thing? Is that going on?
I haven't seen that happen before you bind a policy. Where I've seen drones being used is after a policy is bound and they're doing an inspection. Sometimes drones will be used to give visuals of the upper parts of a house without sending a person up there to look.
But they're not doing it unbeknownst to the homeowner. Like, I own a house. My carrier is very likely not flying a drone over my property without me knowing about it, checking things out. Okay.
No. Not that I'm saying emphatically
No, I
no,
understand.
but I'm not that I'm aware of.
Fair enough.
I don't think that there's all sorts of like laws that protect the homeowner's privacy and
All
all
right.
of that kind of stuff. Yeah.
So in the first discussion, we talked a lot about the causes for the drastic premium increases we've seen over the last couple of years in property casualty insurance, auto insurance, homeowners. You gave some great illustrations and painted a very vivid picture. So my next question is what advice do you have for customers that are coping with premium increases and trying to get adequate coverage, but also be able to do it as much as possible while being budget friendly? What suggestions, advice do you have?
My suggestion and advice is pretty simple. I think it plays into the your whole purpose of your podcast of increasing your financial IQ. I think many homeowners overextend themselves when purchasing a home for whatever reason, right? They buy more than they really can afford just because a bank says you qualify for a certain amount of a mortgage or a certain amount of a house price based on your income doesn't necessarily mean you can afford the home. So what I think is happening in my biggest advice to consumers is to make sure you are buying a property that a $10,000 situation is not catastrophic for you financially. So if you're in a home and you have a situation happen and it's anywhere from $3,000 to $10,000, I would love, it would be in a perfect world, every homeowner be able to absorb, a loss under $10,000 without leaning on their insurance. A lot easier said than done. Not everybody works with a financial advisor like yourself, Chris. Not everybody responsibly purchases what they purchase, whether it's cars or houses, right? And they get to the point where they have a $2,500 water damage in their house and they can't afford to fix it. So they're
Right,
leaning
it's a
on their insurance
catastrophe.
policy as a maintenance contract as opposed to an accidental and sudden item. So what I'm starting to see, and the reason I started this way, is many carriers are starting to increase deductibles because the smaller losses are part of what's hurting the industry. The frequency of losses, like when there's power outage, extended power outages, and people make claims to refill their refrigerator for $700. When there's like I said, a small pipe burst when it gets really cold around here, or a wind comes in and blows some siding off of your house, and it's a nominal fee to fix. The carriers are trying to eliminate those claims. So we're starting to see many carriers, if your home replacement cost is above $500,000, they won't offer anything less than $2,500 deductible. If it's above $750,000, $800,000, that bracket, they make you go to $5,000. And if it's over $1 million, some carriers are making you go to $10,000 deductibles. That is an effort that is to try to put some more responsibility on the homeowners so that the policies are viewed, again, not as a maintenance contract. They are viewed as what they're supposed to be for accidental and sudden larger situations. I think if we can eliminate, if we could get people used to increasing deductibles and self-insuring some of the smaller stuff, it'll correct some of the issues in the insurance marketplace. We saw it with health insurance. Deductibles are through the roof now. Ever since, I forgot roughly what year it was, but it was pre-2016, 2008 to 2016 is when all those changes in the health insurance market went. The property and casualty insurance mindset is starting to follow
Yes.
the health insurance mindset. And that is something personally I agree with. I think if you have a home over a certain value, you should be able to absorb $5,000 without leaning on your insurance policy.
Right. No, I agree wholeheartedly. Insurance, and this is the case for health insurance, although, if I was king, the health insurance market would be different too,
Correct.
is you don't, you shouldn't rely on the insurance company for every little thing that happens negative in your life. It's there to prevent huge financial losses, catastrophic kind of events, not small ticky-tack things, which are just a nuisance. But if you're financially fit, to your point, you're doing best practices, not living above your means, saving, investing regularly, having an emergency fund so you have some cash on hand. If you're doing all the right things, when you have these invariable the car breaks down, a little fender bender, something happens at the house, you could absorb that and kind of walk right through that without much stress if you're
Mhm.
financially fit. The insurance carrier can't and shouldn't be in a place to handle things that are too small in nature. And I guess we could argue over what too small in nature is. But I think
Mhm.
sometimes in America today, people lose sight of what insurance companies should do, and they want insurance companies to do more than they reasonably can deliver.
Correct. I think the one more point to that is I think our country as a whole. I'll speak to the millennial generation and the generations after the millennial generation. And I'm an old millennial. I made it by like a year. Um, Many of my generation and the generation before me are not very good with their hands, right? They don't understand how things work. I think if you're going to own a home, you need to understand how the plumbing on a basic, introductory level. How does the plumbing system work? How does the HVAC system work in your house? How does the roof work? How does water stay out of your home? What types of things should you be inspecting on a routine basis in your home? I think the insurance carriers um, can provide, and I think they should provide a little bit more resources to homeowners because and I'll speak for some of my friend group. I've got friends of mine that will have a bathroom in their basement and they won't even go down there and look at that bathroom for 2 months at a time. I mean, I have a bathroom in my basement that I don't use very often, but I go down there once a week and make sure I flush the toilet and turn the shower on for a minute or two just to keep everything moving and flowing. And I go down there and I check everything periodically, water heater, electrical, all the different things to make sure everything seems um, up to snuff, because what leads to a lot of these larger losses is homeowners not taking diligent care of their properties and
Right.
maybe could have noticed a water heater starting to leak before the thing bursts and floods the whole basement. If you're routinely checking your items, checking the different items in your home, you can avoid a lot of the bigger things. Older prior generations were a lot of them were very good with their hands. Unfortunately, my generation and generation after me hasn't spent a lot of time understanding how things work, right? I think of the guy on TV there that has the show How Things Work, right? You need to have a general understanding of how the whole home works, I think, in my opinion, if you're going to go purchase a home.
Gotcha. Steve, how about shopping around? How often should consumers shop around their property and casualty insurance coverage?
So I think the dealing with an independent agent is really the key to having your insurance program well coordinated. The key word there is well coordinated. Notice I didn't say the best possible price in the marketplace. It needs to be proper for your situation. And frankly, an independent agent has access to many, many carriers. I have 24 of them, for example, in my office. So we have some benchmarks in our office that determine when a customer is fully remarketed through the entire marketplace, or we decide we need to stay with the carrier. So to specifically answer your question, we automatically shop every client when they hit the 3-year mark with a certain
Okay.
carrier, whether the rates are flat, up, or down. We automatically take a look. We automatically take a look at any account that overall, the whole program, home, auto, umbrella, right? Not just one line, the entire program goes up more than 15% on an annual basis, right? Year over year. We automatically look at those. And then obviously when customers, if things change in customers' lives and they notify us, then that could prompt us to need to look around as well. So to specifically answer your question, I'd say every 3 or 4 years. If you're with the same carrier, it makes sense to look every 3 or 4 years because carriers offer introductory rates to new clients, and you get caught in the increase game as it goes, where they increase your total insurable value, they increase your rates, right? So you're gonna oftentimes see an uptick. The other reason you need to being with an independent agent is fantastic in my opinion is because we're usually very proactive. right? And we know your family, we know your whole situation, which is very different than if you call the 1-800 number to get a quote from a carrier. They only can base what they're doing off of what you tell them, right? So you might not be telling them everything they need to know because there's a little bit of a trust factor there. Typically, your independent agent's a community member, and you know them as a human being, or their family, or you have some sort of barometer on what type of person you're talking to. So there's a little more information. It's more full disclosure. And again, we don't work for insurance companies. We work for the consumer. We work for you. If you're my client, I'm working for you. My job is to make sure all of your risks are discussed, all of the options are discussed, all of the different ways to handle different situations are fully discussed, and we understand so that we make decisions together, as opposed to direct writers. Oftentimes, direct carriers will oftentimes say, this is what it is what it is, and take it or leave it. So you don't get the consultative approach that you do have an independent agent. The other thing with an independent agent, because we have so much access to so many different carriers, we know more than the average bear about what the marketplace is doing because we
Right.
have
You have
data
a
point.
you have a good view of the landscape.
Correct. So, I think, there many years ago, there was a bunch of people in the industry saying the independent agent is being squeezed out by the direct writers because these companies, I'll use Geico and Progressive as examples. They're well-oiled machines. They're very good at what they do. The people that have run those companies have done a fantastic job at what they're doing, right? But they have significant limitations. All right. Every carrier has a different appetite, a different thing that they want, a different profile that they want to bring in. If you come to an independent agent, I can handle every type of profile, no matter what you're looking for. From the 22-year-old that just graduated college and all they have is an apartment and a car, I can handle that. To the extreme wealth in someone that's paying $40 million for a house on the beach in wherever, I can handle that too, right? Whereas, therefore, as a consumer, you have one point of contact for insurance. That is my motto is you're hiring me to buy insurance for you.
Yes.
Right.
No,
So I think the advantage there is from the end user, you have one person to talk to. And I have all these options and all of these different tools in my toolbox that I can use to provide the best overall solution for you.
we've talked about this offline, Stephen, and I agree. I'm an independent advisor. So very similar to you, we represent our clients to help them with their financial planning and investment needs. We do not have proprietary offerings. We don't have a mothership that says, well, this is what we want you to do this year, and that might change next year. And that independence, I think, in today's marketplace, that's ever changing, it's dynamic, it's challenging. That independence, I think, for the consumer is valuable. And I think companies like you mentioned, Geico, Progressive, they're fine. There's nothing wrong with that. But I know for me personally, and listeners should know this, I've always used an independent agent for my property and casualty needs, which have changed and evolved over time because I have children, because I have investment properties, because I've bought and sold properties. There's been some accidents along the way. There's been a whole bunch of changes, but I've always worked with an independent agent, and I like the idea that I could go to one source that knows me, and we're not going to talk every day, but that knows me and can help me negotiate through changes in my life as well as changes in the insurance marketplace. So I'm a big believer in the independent agent, but you need a good independent agent. Not all independent agents are created equal, and I'm not going to hype you up necessarily. I think you're excellent, and I would have no problem if someone said, should I speak with Steve and his team? Yeah, of course. But there's lots of good agents there, and I have a lot of clients and contacts that aren't in Connecticut that might not even be able to use your services. But the point is, you do need a good independent agent, and not all independent agents are created equal, right?
I think, yeah, 100%. I think there's a big push for private equity, there's a lot of private equity firms purchasing independent agents right now. The reason they're purchasing us is they love recurring revenues, which is what independent agencies are all about. So some of the investors that are, used to turning small profits on investments see that they have a nicer chunk of money in a recurring revenue situation with an independent agent. So they're starting to buy these up all over the place. So there's companies out there that have, I'll call it premium under management, that have gone from 10 million to premium under management to hundreds of millions of dollars in premium under management in very short periods of time because they're purchasing agents. Well, what's happening in those situations you mentioned the mothership, right? They're not governed by a mothership, but they are governed by certain contracts with certain carriers, right? So some contracts that agents have will be better than with carriers will be better than other carriers. So a lot of these massive private equity firms are only putting business where they have the best contract with the carrier and they get the best bang for their buck. Whereas opposed to coming to a more medium-sized shop like myself, I do whatever's right for my client, not necessarily what's right for the contract I have with the carrier. Now, any agent can say that, but we're big enough to where we have all the options, yet small enough to where we're still a family-held, closely held corporation. We govern ourselves, we do whatever we want, and we do what's right for the client. Because my thought is, I make a profit on you as a client the longer I keep you. So if
Yeah,
I only
that makes
have you
sense.
for 2 years, I don't make any money. If I
Mhm.
have you for 30, now I'm turning a profit. But the only way to keep you for 30 is to make sure you see the value in me, right? In
Yeah,
my operation. So that's why we have to always take whatever's right for the client first. Now, there's many agents that are very small and they just don't have the access to markets or resources to solve the problems that you have. So when you're choosing an independent agent, you're going to want to look for one that's been around for a long enough time. And I don't know exactly what that time is, but I would say north of 15 years.
yeah,
Um, would be great, and you want to make sure they have a staff of more than one or two people. You want to see maybe 5 plus, and you want to make sure they have access to 15 or more carriers. If you're going to them and they only have 2 or 3 carriers, there's really no difference between them and the direct writers out there.
no, I love that.
So
I love
that's
that.
that.
So, um, if anybody does want to get in contact with you that's listening to this, how do they get in contact with you?
You can go on my website. It's Fahy, Fahy, insurance.com. You can Google my name, Stephen Hunt with a V, and I'll pop right up. And right on our website's all our contact information, all of our team. We have 15 people here. All of them are fantastic. They've all been with me for a long time, and we're all interchangeable in a lot of ways. One other thing I wanted to mention really quick about the pros and cons of independent agent. A major pro to dealing with independent agents is we have networks of other independent agents, right? And we all talk to each other. We're all there. We're friendly competitors. We help each other out. So my point in that is if you bring me a situation that maybe I don't have a solution for, I can refer you to someone of like kind and quality that has a solution to that situation so that you're well taken care of. You're not on
That's
your
good.
own. I had
I
a
did not know
client,
that.
I had a client buy a beautiful, beautiful home up on a lake in the middle of nowhere, Maine, right? I didn't have myself the right market, but I referred to my partner in Maine and they took care of him in a matter of a day. And he's, 100% under control. So that's the other beauty of being with an independent agent is you get access to more independent agents that can solve whatever problem it is you're bringing to them.
Great, great. Thank you so much. This was a great discussion, as was the first one. If you're listening to this and you haven't subscribed to my podcast, Simply Financial, please do so. I'd appreciate it quite a bit. And just like Steve, you could go to my company website, elliottwealth.com, get more information on the financial planning, investment management work we do to help our clients win with money. Thanks again, Steve,
Thanks,
and
Chris.
listeners. I'll be back with you on the next episode of the Simply Financial podcast very soon.
The views expressed are not necessarily the opinion of Osaic Wealth, Inc., and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of information provided at these websites. Nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to or your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through Osaic Wealth, Inc., member FINRA, SIPC. Insurance services offered through Elliott Wealth Management Services, LLC, not affiliated with Osaic Wealth, Inc.